Hello and welcome to CMXtra, the Capital Markets Exchange podcast. I'm David, and in today's show, we're taking a deeper look into new issuance, the challenges that European primary markets face, and the role that technology and greater collaboration can play to streamline new issue processes for the buy side. And before we welcome our buy-side, sell-side and platform guests for today, a reminder that here on CMXtra, we've been covering topics from dealer wallet share to AI on the trading desk throughout the season, as well as hearing stories from the industry's rising stars and next generation of trading leaders. So if that's your bag, then do look up our back catalogue and hit subscribe wherever you get your podcasts. And later on in today's show, we'll be sharing details of some in-person networking and events coming up in 2025. But back to today's topic. Repetitive, high effort, inefficient, error prone, time consuming. No, we're not talking about other capital markets podcasts, only joking, but we are talking about primary markets new issuance. Now, while secondary markets have largely embraced and are reaping the benefits from electronic trading and automation, the primary space is still something of a laggard, heavily reliant upon manual processes. So today we want to understand what it is that's been holding up new issuance innovation. We want to explore the pragmatic steps that can be taken to improve the processes and to learn about the positive steps that are already being taken to drive greater collaboration, digitalization, and automation. So, joining me to issue their advice are Managing Director and Head of DCM Syndicate for HSBC in EMEA. It's Asif Sherani. Hello, Asif.
Hi, David. Thank you very much for having us on the show.
Thank you for being here. Also joining us, our Head of London Portfolio Operations and Senior Trader at Western Asset Management, also known as WAMCO. It's Chetna Mistry. Hello, Chetna.
Hi, David. Thank you for including me too.
And finally, we have Executive Director for Fixed Income Strategy at S&P Global Market Intelligence, Olivier Dermaux. Hello, Olivier.
Good morning, everyone. Thank you very much for having me on the show.
Great to have you all with us. And well, let's jump straight in with you, Chetna. You're on the buy side at Western Asset Management there. Tell us briefly about the frustrations that you face with new issuance at the moment.
Well, the biggest one, and you'll hear a lot of people say this, is it's too manual. It's way too manual. It consumes too much time, and those resources we can deploy elsewhere. So that is our primary goal. Let's try and speed up the way in which new issues are set up. Let's look for an STP process similar to that of secondary markets that we can put into the primary market. And let's just speed this whole thing up. That's what the buy side needs.
So very manual. Whenever we talk about manual processes, we talk about, well, humans make mistakes. If you're duplicating lots of processes, lots of manual entry there, does that also manifest itself in errors and inconsistencies?
Yeah, with anything with a human touch, you know that there is a possibility of human error. We then have to put in maker checker controls in place. That takes up more resources of a secondary person. And so it just becomes very much time consuming. We now have got to the point where we have enough tech in the market that we can seriously consider automating this and getting the whole industry on board.
And I guess the manual effort there, that also slows things down an awful lot. Is it easy to put a cost on the slowness of these manual processes?
Not that easy, but I know if we take a step back and look at the way the primary markets work, I know Syndicate desk will be happy if we all put our order in within half an hour of the books opening, right? Normally it takes us quite a while. It could take us an hour. It could take us 2 hours, depending on how complicated it is, how many tranches, how many accounts are going in. If we could speed this up, we're hoping, and this is a nice dream for me to have, is the books close sooner because we're getting our orders in sooner, and then we can price it sooner and we can get on with our day. Because in effect, once we've put in our order on the buy side, that's it. We're pretty much done after the books close, and it's a waiting game for allocations.
Asif there on the sell side at HSBC, I feel I should give you an opportunity to respond to what Chetna's saying and maybe share with us some of your frustrations from your side.
Yeah, thanks very much, David. Unsurprisingly, really similar frustrations to what Chetna has mentioned. I mean, if we look at the kind of process, it is very manual, it is very tedious, and it does have a huge amount of data entry that is repetitive in nature. The systems that we use in some instances are too clunky. In terms of innovation is really stymied from the fact that these systems are legacy systems being used with a lot of bolt-ons over the years. So really, if we are looking at the process at the moment, we are sharing a huge amount of the same frustrations that Chetna and the rest of the buy side community is mentioning. I mean, I'll give you a small example. When we look at marketing a new issue to the investor community, it often starts off with a message being typed up in Bloomberg. So we use a message, we then send that message out to market to all investors. If you look at that data that is entered into that message and see how many times that data is re-entered down the line, you're probably talking about double digits. Again, give you examples on that. It goes into the term sheet is sent to the lawyers re-enter that data into the final terms, then it goes to the back office have to re-enter it in their data systems, it goes to the CSDs to get the security setup or ISIN requirements, they have to enter it. It goes back to Bloomberg to set up the security in Bloomberg. They have to enter the same data manually. We have to enter the same data manually in our ebook. We then, if we use systems, which we of course do, like Olivier's system in terms of marketing directly to investors, it has to get re-entered there. If you use another system like DirectBooks or any of the other competitors, you have to re-enter it there. So the same same data set is being re-entered multiple times. And as you say, and as Chetna mentioned, the increased touch points does allow for more human error as well. So from our perspective, definitely having a golden source for the data would help reduce the process tremendously. And it would help reduce the kind of data entry points. And what we really feel, taking a step back, going to the point you mentioned in terms of what are the major challenges for the markets at the moment, for us, really, it boils down to fragmentation. Fragmentation for us is in two kinds. One is the number of vendors and systems we're using. And we feel there's too many doing similar products and similar pitches, which does create a bit of fragmentation. And then the second really is the kind of fragmentation created by the lack of interoperability between the existing systems and the new systems. So long-winded answer, but same frustrations and a very tedious manual process when it comes to new issue data.
That fragmentation, those legacy systems, the repetition of manual entry there as well. If I was wearing my tech hat on, I'd be saying this is prime digital transformation kind of area. Technology plays a part in it, but it's also about the business processes that need to be modernized that go along with it, enabled by the technology, enabled by the platforms. Olivier, this is a good place to bring you in at S&P Global Market Intelligence. You're kind of sitting in the middle here, aren't you, really, between Chetna and Asif? And there's a clear gap that needs to be bridged, and it's up to platforms like you to try and facilitate that. But in reality, how difficult is it, given the complexities, given the frustrations that we've heard about, how difficult is it for you to build those bridges?
Yeah, it's a great question. I mean, if you take Asif's frustrations and Chetna's frustrations a little bit separately, from a bank perspective, what Asif's just described is what the challenge is even for us as a vendor, because as Asif mentioned, there are numerous different vendors operating in the same flow of a new issue. So it's not one person that ticks off all the boxes. You've got to look to interoperate as best you can. And as you mentioned, from our side on the investor access piece, we try and make data input as efficient as possible. We have a parsing technology that means you don't have to manually input. It extracts the data from those term sheets, but that doesn't take away the fact that Asif and his team have to go and input that data in other systems as well. Now, in terms of the buy side and what Chetna mentioned, trying to get less of a manual process, that's something that we are undertaking and have undertaken for a while, again, referring back to investor access. And I think where we're seeing some progress there is around interoperability between systems, because historically, these tools where the buy-side input orders back to the banks have been through a web GUI, and now we've definitely seen an evolution from the buy side into wanting to place their orders from another system, be it an OMS system, an EMS system. And through partnerships that we've announced to the market with the likes of Bloomberg, Charles River, I think Folio, etc., we're trying to cater for that to make sure that we capture as much of the buy side as possible, because as I'm sure Chetna can attest, no two buy sides are the same, really. Everyone seems to have a very idiosyncratic workflow, and we have to try our best to find solutions and build things that can be used by as much as the market as possible.
Interesting, and it's collaboration really that's key there. Obviously collaboration between buy and sell side, but as a platform in the middle, you mentioned it there, the number of different partners. Not everyone wants to engage with you directly as their primary platform. They've got other systems, OMSs and so on, that they want to engage with you with. So it's up to you to ensure that you are as open and inclusive as possible to enable as much trade to go through you guys as possible and to join the dots as best as we can. All right, good. Moving on. So if everyone can agree, and it sounds as though we do, that there are frustrations there and that something does need to change, and we can certainly see that, then why hasn't change been happening? And I guess if we are going to enable change, we need to understand why it hasn't happened so far. Chetna, what for you are the barriers to improvement and innovation as you've been seeing them?
Well, prior to where we are right now, the tech didn't exist. That is now here. We see quite a few platforms and we can move to the next step. Open, frank conversations, I think, between the buy side syndicate desk could happen more often, right? That is one of the stumbling points. We both want different things, but we have to come meet in the middle. That is where these electronic platforms come in. Now, the one big point you need to realize is the buy side are pretty agnostic as to which system we use, right? We don't want to, as Asif mentioned before, have to key things in 2 or 3 times, and we're clearly not going to do that. So what we need to do from the buy side is put pressure on our OMS vendors, whoever they may be, and say, no, you need to talk to DirectBooks, you need to talk to IPO, you need to be connected. So when I send an order from my system, it goes to all platforms, right? And I can bring in my data and set it up at a click of a finger, something even I could do then, right? And I'm saying that because some of my team would look at me and highly be suspicious as to whether I'm doing it correct or not. So, but there is some low-hanging fruit I think we can quickly pick off to make this better. And as we try and improve the system, we should get more people on board saying, yes, this is working. But I think the biggest issue is a frank conversation between the buy side, syndicate, and these vendors. Let's get them both in a room. I know we're all competitors at the end of the day, but we all want the same thing, a nice, easy process so we can move on and do more interesting things.
A rising tide raises all boats and all of that. So even if you are, competing with one another, I think everyone would agree that this is in the general interest. And I want to come back to the accessibility point in a moment, but not until I've asked Asif the same sort of question then. Why is this area of the markets, why is it proving so darn complicated and so slow to improve? Anything else that you would add to what Chetna's put there?
Yeah, look, I would tend to agree with Chetna. More dialogue, more open communication between all parties, not just buy side and sell side, but the platform providers as well, will be key. I think we are seeing some change. It is very slow, but we have seen some positive change. Again, Olivier and the team in terms of direct investor access, the parser tool that he mentioned, these are all very positive developments. But there's too few. And between the kind of progress we see in the secondary side, as you said earlier, there's too few of those progress or tools available in the primary side. And for me, it comes down to fragmentation again. I know I harped on about it last time, but ultimately, if you look at the secondary markets, the reasons they've been able to automate is because if I'm trading with Chetna's firm, in the secondary market, that's between the two firms. We don't have to have another platform provider sit in between, or there's no other need to connect to other banks or to connect to other systems. That is the two firms trading, and yes, it could trade via electronic platform, but it's information flowing from two firms ultimately, and that allows us to automate at pace. When we're looking at the primary market, we are having to deal with multiple platforms, multiple vendors as discussed previously, but also multiple banks, and all those banks have to connect together as part of the syndicate as well. So we have to connect together our platforms that we're using, our ebooks that we're using, etc. So that fragmentation in the process is what is slowing things down. So from my perspective, as I say, that remains a key frustration.
Fragmentation, got you. Olivier, as Chetna said, the technology is increasingly out there, but that's only one thing, people, process, technology, all of those things. What are the other barriers beyond the technology piece that you've had to knock down as you and your competitors, colleagues, call them what you will, have been developing their platforms?
Yeah, I mean, the points raised by Chetna and Asif, without kind of echoing, fragmentation is a major blocker, because as you look to automate the process as much as you can, you want to be able to do as much as your primary business through that automated process. Having to use, let's say, investor access into Bloomberg T-Stocks into Bloomberg AIM is a fully automated system. But if you can only do that for a certain percentage of your deals, the frustration lies in the deals which are not used through investor access. You have to go back to your old archaic manual process and do it that way. And I think that kind of leads nicely into adoption. From our perspective, I think adoption really is key, both from the sell side and buy side. As we get greater and greater adoption of these tools, it accelerates the progress that one can make, because some buy side will prefer not to use any systems for primary. They still think that interacting with their salesperson at a bank is key to that primary process. So it's both an education and an adoption piece as well. You're not going to get everyone in one foul swoop. It's going to take some work, and it's going to take reaching out to the market. We work with HSBC a lot on that kind of thing. So look, fragmentation, being able to do all your workflow in one specific, efficient way, and also just getting everyone on board with the direction of travel in the primary space.
Yeah, that adoption piece, I think, is particularly interesting in as much from a broader perspective, because adoption means change. You are adopting something often in place of something else, and from lots of cultural reasons that can be very, very difficult, particularly when you are in a risk averse environment. So what needs to happen then? Again, we've understood what the challenges are. We've understood what the barriers are in terms of making those next steps towards improvement. Asif, if you give me 1, 2, 3 things that we would need in order to improve new issuance, and how you think we could get there, what would those top 2 or 3 maybe steps be, improvements, what would they be?
I think from our perspective, what we're really looking into are new technologies. So whether it's, of course, the development of AI and how to use AI to improve the new issuance process. We've seen vendors, for example, come out using natural programming language and AI models to read terms that are produced on new issuance and to then summarize those terms into the term sheet and final terms. So automating a process that takes lawyers and analysts on the desk hours to do. So we're seeing some automation. So using the new technology available to us, of course, in a very compliant manner, is going to be key. The other thing we've really looked into more recently, David, has been the use of DLT. So we've also developed a platform at HSBC called HSBC Orion, and the idea is to use private permission blockchain to experiment and trial for new issuance. Now, I know there's strong views on this and when the adoption may come in place, but the reality is we're experimenting with new technology because it gives us a clean break from the legacy systems. And a lot of the inefficiencies we see in the process as of today are coming from having to use these legacy systems. So we are exploring, as I say, new technology, whether that's the use of AI and such products that are available now in terms of sophisticated algorithms, or on the other side, DLT and technology like that.
Yeah, that clean break from the legacy piece there, Asif, it suggests, would I be incorrect in saying a low level of confidence in the ability to iterate the legacy fragmentation situation that you find yourself in right now, and almost just lumping into a new platform feels like it's just going to be that cleaner, more successful route forward, much faster than iterating legacy systems?
Look, I wouldn't say it's the most likely or most probable situation that we get a clean break or a complete break from the legacy systems. But as anything, we are investing in that technology because we do see some ability of that technology performing quite strongly in the future, or playing a role in the future when it comes to tokenization, for example. So it definitely feels like there is a growing consensus around the direction of travel, but we can't ignore the legacy systems. We can't not invest in the legacy systems. We have to of course, back both horses at this stage.
Of course, and yes, like you say, using NLP to try and get the data entry that little bit better, that little bit faster, certainly seems as though it would help there. Chetna, is there anything else on your list? Obviously, what HSBC were doing with Orion earlier this year, 2024, got a bit of media there as well. Is there anything else that you've had on there? Any takes on tokenization and the DLT stuff?
Sure, yeah. We are at the start of a journey here. I do agree with Asif. This is the path we need to follow. We will see a mass digitization of bonds. That is the obvious course that we're going on. There's a lot of red tape or admin to get through, to cut through, simply because of the nature of the industry we're in. But we're making good progress, right? All the sell side are testing their private blockchains. They're doing proofs of concept, which are great, but the buy side is a bit behind. We're not keeping pace with the sell side. And it is something we need to focus on as a group to get there and to keep pace. The technology will keep up with us. We've seen that. We've seen new things come out all the time, but the buy side is falling a bit behind when it comes to DLT and digitization. If I may, I wanted to touch on one thing that Olivier said earlier about having that notion that speaking to the syndicate desk is the way new issues should be done. I agree with you. I think that's wrong. I think there is an education to be done by the buy side to say, hey, you can talk to syndicate till the cows come home, but please use the system as well. Once the book is closing to subject, please start using some automated. I think it is this notion that if I put it into one of the platforms, I can never speak to syndicate again. And that is simply not true. We are not saying that, and nobody is saying that. But if I was to take a step back and say what we can fix, there's another thing, like roadshows are painful when they come for new issues. Having to get on the phone and quickly try and book your slot. Why can't we, and you've heard me say this before, guys, take the restaurant booking technology, put it onto your platform so I can go and book my slot and say, I'd like the 10:30 one. There we go. I don't need to bother anyone. I can do it myself. These are easy things we could do. Maybe I'm simplifying it a bit too much, but these are little steps we can do to get more adoption and get people to use platforms.
It is those baby steps. You're absolutely right. Olivier, I'll come to you in a moment, but I know Asif is champing at the bit to come back to something that Chetna said.
No, I would just say, I think the roadshow booking that Chetna mentioned is a fantastic example of slowness of adoption. We've had, platforms that are allowing for that kind of booking to take place. We're actually using them in certain markets, but the mass adoption hasn't followed. And again, we're curious to see why that is. Is it human nature, or is it just, sometimes laziness to move to a new system? But to Chetna's point, it's definitely something we'll take away from this, and I'll show that technology to you, Chetna. It is, as you say, very easy to use and life-changing. Just on the point for using technology for investors and sales, again, fully agree with Chetna. I think if we look at how we're operating with our sales desk, we want our sales desk to spend less time inputting orders in a system. We want them to spend more time on the phone selling bonds. So I think that just fits nicely with what Olivier and Chetna were mentioning. And then lastly, just on the digital front, as Chetna mentioned, I think clearly from our perspective, there's a lot of work that still needs to be done with the industry as a whole. The ecosystem is not as developed as it should be, and moving as of today to a pure DLT model without the rest of the ecosystem moving, kind of like giving you the example of a Ferrari, buying a Ferrari, but only having a 20 mile per hour speed limit. The rest of the ecosystem has to move before we can actually fully utilize this technology.
Speaking of going at speed, I do need to move on. Sorry, Chetna, I'll come back to you in a few moments' time. But Olivier, I need to come to you with all this talk of technologies. Must be music to your ears as a platform provider. Is there anything else alongside, on top of what Asif and Chetna have shared, that you'd be keen to take into account in terms of these next steps now, in terms of maybe the direction in which you are traveling there, S&P?
Yeah, absolutely. I mean, look, for us, if you just park the DLT piece to one side, we're still obviously trying to solve the base case of issuance, right? As we discussed, that link between the buy side, the sell side. And just to go back to Chetna's point around a buy-side trader speaking to their salesperson in the chat. We're by no means saying that's the wrong way of doing primary, but for the banks who participate in our tools, the value they see in using the tools is they get as many orders electronically as possible. So it goes back to that adoption piece, and that doesn't sit with either Chetna or Asif. That really sits with us. We're doing a lot of roundtables, a lot of events, a lot of partnerships that hopefully increases that usage. Now, if we bring it back to DLT, it's quite an interesting space for us as a vendor. Obviously, S&P is a huge company with many different facets to it, and we're very involved in that space. But when it comes to the primary piece, it's a slight pivot away from what we provide today in terms of a workflow solution. And we speak to a lot of banks, a lot of buy side around it. And I think where we'll add value as a company really is around the data aspect of it all. We'll look to help from a workflow perspective wherever we can, and a lot of exploration needs to be done there. But it seems that there's a need for data and information that a company like S&P could provide, and that's where I think we're going to look to partner with the banks, with the buy side, and provide value in the DLT space.
Okay. Let's talk about risk very quickly. I'll put this out to everybody. What are the risks here? Because with change comes risk. Are there any lessons that we can learn from elsewhere in the market? It's about where automation and hands-off has worked, hasn't worked, has had some teething troubles, whether it's data security or too much automation without enough hands-on there and governance and oversight. Who's got something they want to share on making sure that we de-risk those, mitigate the potential risks here?
Sure, I could take that one. From a buy-side perspective, the data for new issues, all the data fields, they have been on the vendors' platforms for quite a while now. For us, if we're consuming it, we're automating it. To mitigate some risks, I think for the interim, we would still have to have a set of eyes cast on it just to make sure everything's okay. Because at the end of the day, it's the syndicate desk keying it in. There is a human element there. It's not machine start to finish. So I think we would have that there. The risk, other risks that we can also mitigate, we still go through pre-clear compliance, still checks all the guidelines. So if anything is incorrectly set up in a new issue, we would catch it there as well. But I think our controls we have in place right now wouldn't fall away with the automation of setting up new issues. We would still have them there.
Asif, risk on your side, what do you see as being potential things we need to keep an eye out for?
Yeah, no, it's a very good question, David. I mean, I'll go back to my key risk on what exists as of today, which is fragmentation. And I think as we move to new technologies, whether it's DLT, whether it's anything else that we're using, to make sure that we're getting a clean break also means that we aren't seeing the fragmentation develop in those markets. And we are seeing early signs of that. So it's key to just monitor that and where possible mitigate some of that.
Olivier, what's your take on how this will change the market? If things have been skewed maybe towards larger investors now just because of how it's all worked, will the changes that we're talking about here potentially change that, make the market maybe more accessible? And Asif and Chetna, get ready to steal on this one too. But Olivier, you first of all.
Yeah, I mean, it's Chetna raised a very good point around the data aspect of it all, right? It's through these workflow solutions, we're trying to mitigate as much of that risk as possible. And as Asif mentioned, having to rekey is a risk. But the problem is they're always willing to include a human aspect, because at the very start, someone will have to manually input that data. So what we can look to do is minimize the risk along the chain of having to rekey it in different places. Well, AI is a buzzword, but we do look at solutions internally where we could help and supplement that kind of thing. But then for the buy side, it's also about the speed of delivery of that data. I think it's a big conversation point on our side. You can get the data, but during a new issue process, the buy side need it in a very timely manner. And, the banks are very good at doing that, but we need to kind of automate that process as much as possible so that the buy side can anticipate receiving certain data points, certain updates very efficiently so that they can, change their order, keep their order, whatever they want to do. But I think that that's one piece where risk has to be mitigated, is in the efficient passing of information across the investment chain.
And then just going beyond risk for a moment in terms of how we see what the direction in which we are headed, more efficient process, more streamlined processes, a more accessible market there. How do you think that's going to change the market, do you think? How do you see it kind of fundamentally altering maybe in 3-5 years' time?
Well, I think the key to making that happen is going to be partnerships, right? As Asif just touched upon there, even in the DLT space, there seems to be a few pods or different companies offering similar things. And in our space, it's clear there's competition along most of the product set. If the market can come together as much as they can and consolidate that workflow and just give choice to the market, that's where I think hopefully in 3 years, you're going to see real progress.
Okay. We need to move on. So just very, very finally and quickly, please. I guess it's rounding off and setting the scene for what might happen next. Quick examples of positive steps, some green shoots, some green leaves, the signs that things are indeed moving in the right direction. Asif, on the issuer side, what are you seeing? What are you seeing that's kind of already a few steps towards nirvana in this area?
Yeah, I'd flag two things. One, as I said earlier, is the use of AI or natural programming languages to automate some of the data reading and the machine reading that is coming online now. And then secondly, things like Olivier and his firm is doing, which is the direct investor access. We've talked about, frustrations there, how to make it smoother, but it is definitely a step in the right direction.
Fab. Chetna, anything that you would share with us that gives us some hope that things can move in the right direction?
Sure. We've already seen that with IPO doing a JV with Bloomberg, where we can leverage the secondary market API links to bring in data for new issues. So that's been a huge step forward. And that the secondary market platform is something nearly everybody is already connected to. So trying to leverage the current platforms to fit in the new issue process, I think it's a great start for us, and we just need to continue and remember what Asif is saying. Let's not do fragmentation. So here's a controversial thing before I stay quiet. That booking technology, maybe show it to the platforms and get it on their system so we don't have to go to yet another system to book a roadshow.
Final word with Olivier. I mean, I'm sure you would say your platform is the future, but anything else that you would share with us about the future as you see it?
No, I think Asif and Chetna sum it up perfectly. It's the key to future progress is going to be partnership, right? Up until I think a year ago, there were still many disparate systems, and I think there's been an acceleration in different vendors working together to try and help in the primary front. And I think there's still work to do there. And if we can continue that progress, it should lead to a healthier market going forward.
I think that's where we'll call time on today's chat. Olivier, Asif, and Chetna, thank you so much for joining us. Thank you.
Thank you very much for having us.
And if you liked what you heard today, a reminder that you can catch up on our previous episodes on things like AI in trading, leadership and culture, and much, much more at the-cmx.com. That's the-cmx.com, as well as in all the usual places where you find your podcasts. Leave us some feedback, please. We love your feedback. The CMX is the page on LinkedIn. It's a great place for that. And while you're there, perhaps tell us what you'd like us to cover in the future. Speaking of the future, some Finance Hive 2025 dates for your diary. That sounds good. My first date is actually 2024, though. December the 5th, 2024, the FX Hive members meeting in London. And then January 23rd, 2025 is the Equities Hive members meeting, also in London. February 20th, we go to Singapore. Hello to all of our Singapore listeners. That's for our Singapore Finance Hive members meeting. And then we're back in London on the March the 19th for our Fixed Income Hive members meeting. And then everybody will come together. The FI, FX and equities communities come together for CMX 2025 back at the Woolwich Works in London. That's on Wednesday, the 2nd of July, 2025. And if you want to find out more about Finance Hive or about any of these dates, then head on over to the-cmx.com. But that is all for now from me, David, and everybody from the Finance Hive. Thanks for joining us. See you next time.